Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey traders, checking in. I didn't do a whole bunch of trading today. Been working on content and other videos, but we started with a strong day and ended with a weak day. So what changed? Well, in the middle of the day, we had GILD. Well, the WHO, not the band, the organization, posted the GILD trial results for their coronavirus drug that had some pretty high expectations for the potential to help, and the results were not good. And so this is what the market did in the 10 minutes responding to that with a very quick $4 plus drop. Then we bounced, set a lower high, higher low, lower high, bear break, double bottom at the low of the day, not much follow through, solid bounce, and then weakness into the close. So then it resulted in the WHO pretty much pulling that off their website and saying, oh, we shouldn't have posted it that soon, and we need peer review. Essentially, they probably just went ahead and posted it when the company and the market and the government would have liked to have dictated how and when that information became public, but the market saw it and they reacted. So remember in our last couple of videos, the question that we had was, okay, solid pullback, we're bouncing now. Is the pullback significant enough for us to be looking for a lower high to be the result? And it's looking like that is the case. The next couple of days are going to be very important. If SPY from here breaks 272, we are now in a daily downtrend. So with where we closed, we are currently about $7 from a bear break of support, and we would need to see about $9 for a bull break of resistance. A little bit less than that, but we're roughly in the middle of the range. So if we see a red day tomorrow, the bears are going to start gaining some ground. So it's all about 272 over the next few days. And we have a lot of charts that are fairly similar. IWM was a tightening daily range. We had resistance of 122.90, and we hit 122.90 to the penny. A double top rejection. If we break 119.68, the low of today tomorrow, our daily lower high will have been set, and it will then all be about 116.48. A very clear daily equilibrium with our high, low, lower high, higher low, double top, all about 116.48 support on IWM. QQQ, looks like that's a lower high being set. If we follow through bearish tomorrow, it'll be all about 203. We are $7 above support, and we are currently $6 below resistance. So again, right in the middle of the range, similar to what SPY is doing. And what that tells me is we could stay within this daily range for another few trading days into early next week, and probably right smack dab into our next most important tech sector earnings next week. Financial sector on the verge of a daily bear break. High, low, lower high, higher low. Looks like a lower high being set. Support is 21.21 and 21.06. Break those levels, the financial sector will be in a daily downtrend, and the weekly lower high will very convincingly be set on the financial sector as well. XLV, daily lower high. Looking set if we see red tomorrow. All about 96.62, and if that is broken, we will then be in a daily downtrend. So QQQ, SPY, and XLV all looking one way, or looking similarly to each other, I should say. IWM and XLF looking similar to each other, and all about daily supports. Biotech sector, we had resistance of 96.83, and that was a really nice top fishing play. We rejected by 20 cents. Still in a pattern of a higher low every day for the last 6 days in a row. If we see a bear break of 93.43, daily consolidation begins. Daily uptrend is not at risk because the sector has been so strong recently. SMH, semiconductors, looks like our daily lower high may be set. If we break the low of today tomorrow, that will be the case, and we'll then see can the bulls form a higher low compared to 122.78. TLT, new daily higher low established. 167.27 was the last higher low. Now we're moving it up to 168.71, and we have to be cautious of a head and shoulders here. This is the 4-hour time frame. So if we fail 172.15 and then drop down and break 168.71, it will confirm the head and shoulders pattern. But for now, the bulls are keeping the daily uptrend in their favor. The VIX. So it is a potential weekly bear flag still, absolutely, but we are forming a higher low compared to 37.60, and it will all be about 47.80 at this point. So overall, key daily sector support for the next few days is on watch, and we are close. We know what has to happen for the bears to prove it to us. The layout is there. Now the question is, can they follow through? And if they do so on increasing bear volume, we know they are for real, and our weekly tops will be set, and we'll be looking for weekly higher lows to take place sometime over the next 1 to potentially 5 weeks. Gold. Very solid bull follow through from the daily higher low. All about 1748. So 1748 is the resistance level. If we break it, the daily uptrend remains fully intact. If we reject and lose the 4-hour uptrend, which right now I would say anything above 1707 is a 4-hour higher low. But if we lose the 4-hour uptrend without breaking the top, we have a daily equilibrium to be watching and a tightening range. And knowing what the dollar is doing is important. Has the dollar given us a lower high? It looked like it this morning. Now, not so confident. Still all about 193. These gold bulls are positioned very well if the dollar can reject from 193 and see a few days of pullback to remain in this longer-term equilibrium pattern. Silver, inside bar bull break, not surprising. Gold gave us a little bit of a clue yesterday that that was the most likely scenario. So our new daily support is 1454, and it's all about 1585 resistance. And the odds of silver setting a daily lower high compared to gold, much more likely for silver to do so. Just looking at percentages needed, we need about 4% for a silver bull break, and we only need about a lot less for gold, probably less than 1%. Bull miners, great follow through from the strong close the last 3 days. Upper wick, it is a bearish reversal candle. Do we still have the hourly uptrend? I would say yes. Still in an hourly uptrend. If tomorrow we bounce a bit, fail to break 34.74, and then break the low of today, we will then be in an hourly downtrend, and we'll zoom out and look for a daily higher low to form compared to 29.55. Oil, 4-hour uptrend. So for oil, we had our low of the pullback from the new contract in June. High of the bounce, higher low, higher high, build to base of support, higher high. I would consider anything above 1343 as a 4-hour higher low, keeping this uptrend intact. Solid uptrend on this 4-hour time frame, and that's going to be most important for us. And let's look at the daily chart and these June contracts with some more data on them. Daily inside bar bull break. Now we're looking for a daily lower high to be set on this bounce. All that being said, you'd think USO would be going up right now. We are still in that hourly downtrend. That has not changed. Our lower highs, 340, 308, 294, failed to break resistance by 7 pennies today and pulled back. So we are still in a tightening hourly range. The bulls still have not changed the trend. Why are we not going up if June is seeing strength? Well, over the past couple of days, USO keeps changing how it's calculated, and it's taking weight out of June contracts and putting weight in futures contracts further down the line, July, August. All about the hourly uptrend, hourly downtrend on USO, and whether or not the bulls can break this pattern. That being said, the fact that I know June is looking for a daily lower high and USO has not changed its hourly trend yet makes me skeptical of the bulls. Even if we get a bull break tomorrow, if at that point our futures contract in June is looking at daily exponential resistance, I wouldn't have a whole lot of confidence as a bull. Natural gas bearish reaction to the inventory report. Today's a daily inside bar. Overall, the daily consolidation is still healthy. We're looking for a higher low, anything above 1536. And the bulls need to change the 4-hour trend back in their favor. Holding 1774 and breaking 1912 would do it. If we get a more convincing bear break of 177, then it will be a bit of a setback, and it will take a lot longer to change this 4-hour trend as opposed to holding the support on this test. So that is where we stand overall. Can the bears prove it? Can we break daily supports and confirm daily downtrends on our major sectors? Can we break the pattern of a higher low every single week that we've been seeing over the last 5 weeks? Stay tuned, because we're going to get some significant information as to what the probability of that is over the next 2 trading days. I hope you had a good day, and we will see you next week.